Hi, everyone. I'm Ben McLaughlin, and I look forward to discussing the Federal Reserve System with you. I did not know much about this government entity besides they manage our interest rates. Um, but other than that, I didn't know anything about them. But now that I've dug into it, I feel like I have a better understanding of their role in our lives, um, also some of their limitations. You will learn in this presentation, or you will hear, that I refer to them as the Fed because that is what they are casually and intimately called in government, and I would even say media circles. So I may use that term. So if you hear that, just know I'm talking about the Federal Reserve System. Okay, let's move on to the next slide where this is kind of a tagline or a little bit of a mission statement that I found on the Federal Reserve website. I do hope that these words, accountable, transparent, nonpartisan, for a federal agency, I do hope that they are accurate, and that this is how specifically this government does make decisions. It's based on what's best for the country, not what's best for the party or a person. So I am hoping that we can have faith that they can oversee us without a whole lot of interference from government officials. But I guess we will see. So I thought it would be helpful first to dive into the purpose of the federal government. Then we'll talk about like the structures, so we understand the players, and then we'll just dig into why we even have the federal government, and then we'll talk about their limitations. So the purpose of the Federal Reserve Board is it reserves cash to help when there's a financial crisis, a recession, a pandemic. Also, if there's even just a bank that did not manage the money that was deposited into it well, specifically like a regional or smaller bank, the Federal Reserve Board, as long as there's a relationship with that bank, they will try to come in and use their reserves, which makes sense. They are what they are. They are reserves of funds to help us when a bank or even our economy is struggling. So we pull from that as kind of a little savings account to set kind of the record straight or the book straight. So if you do deposit, say, into a regional bank and the regional bank has not managed their money well and they're not able to they lose your money, so to speak, the Federal Reserve will hopefully come in before that happens to save that bank, to manage that bank, to help them, and to give them some reserves. Now, where you also see this on a bigger scale, though, is in 2008, 2009, with that recession we went through. We all heard how the feds bailed out the banks and the auto industry, and these were big, like it was Ford. The banks were some of the bigger banks we know of, and normally they're not really set up to save or rescue like an auto industry, like a Ford or even a big bank. They're really for those regional, is why the Fed exists. But because 2008 was so dire, and with mortgages and lendings and not a ton of oversight in that space in real estate, the Fed had to jump in, and they had to use their reserves to prevent a depression. That is the best way to understand it. Now on this slide I have a bunch of bullets that also speak a little bit more in detail to the Fed and the Fed Reserve Board and how they can assist. But they do create checks and balances. They do manage interest rates. They also manage our monetary policy. They make sure that we have a financial system and with stability in place, and they promote that. And then they do supervise and regulate financial institutions that they actually have a relationship with. So that's a little deeper dive into what they actually do for us. But I think one of the biggest bullets that I want to speak to is they are here to also protect consumers and community development. Again, that's why we can focus on the regional banks and those kind of opportunities, because they do want to build up communities and protect consumers and their finances as best they can. Now, the Federal Reserve structure. So I think it's important for you to see this. I thought this was a great visual, that you've got your Federal Reserve Board of Governors, which are 7 individuals. We'll see a slide, a following slide that has just images so you can actually see these governors. Now, they are not state governors, so I do want to say that. When I saw governors, I was like, I hope state governors aren't running the Federal Reserve. They are not. They are appointed by the president. They're then approved by Congress. And most of them have backgrounds in like finance, law, banking, so that all makes sense. And then there's a federal open market committee. They also help again. They all three come together to help with promoting consumer protections, fostering efficient payment systems, also maintaining financial stability, and then of course what I think we all hear about is just setting interest rates and managing those. Now, on a deeper level, here's our Federal Reserve. I'm not going to dive too much into this slide, just because I've already talked a bit about the Board of Governors, that we have 7 members. They're appointed by the President. And you kind of just see a few little bullet points if you want to dive into the slides yourself and just kind of understand a deeper level of the structure of the Federal Reserve. Now, here's a slide I was speaking of that has the current governors. Again, they aren't state governors. They have diverse, I would say, they have more of a finance, law, banking background. Maybe I wouldn't use the word diverse, but I do like that they're a diverse panel in the sense that they at least have 2 African Americans and 3 women. And most were appointed within the last few years. I would even say 2022, which means that they serve a 14-year term. There is, as you can see with Jerome Powell, there is a chair, there's a vice chair with Philip Jefferson. They will serve 4 years within those 14 years. Now, they can all recuse themselves if there's some reason why they can't, and then someone else can be appointed for a 14-year term. But they're 14-year terms, so there's some consistency. They can see the trends when they are assessing our economy and also any factors that could cause crisis. Now, here are federal bank locations. Like for the Tuscaloosa area, Atlanta would be most likely the closest. Then you've got your St. Louis in there. But these are reserve system areas that support each of these regions if there is a crisis or an issue, specifically with a regional or local bank of some sort. Now, we went through why we have the Federal Reserve. We also went through high level what they do and their structure. What I also want to talk about is like, why do we even have them? Why do we need them? So in the 1800s, consumers experienced panics where they felt their money wasn't secure at their regional or local bank. There were no emergency reserves in place, hence the need for the Fed. And I think the best example of this is watching It's a Wonderful Life. If you haven't seen it, it's a holiday classic. But George, the main character in It's a Wonderful Life, you kind of understand what the panic feels like. There are people in his bank. He's a banker. He's at the window. He doesn't have the funds because he has used what they have deposited. Because a lot of times, from my understanding of banking, we deposit into a bank. They use that as collateral. They should only be using the interest we pay, but they use that as collateral. If they unfortunately dig into our actual savings, then they go into the red. They can no longer provide our savings to us, which is also why the Fed came into place to put those checks and balances. But in a Wonderful Life, you see George in that panic. The people are asking for their money. There's a big developer coming in who's trying to help George out and take over the bank, for a cost and that kind of thing. And George is panicking, and then the community comes together to make it work. But the point is, this was the panic. So if you want to actually get a visual of what the panic looked like, to me, that movie would be it. I did not realize that until I researched the Fed and what they do and why they even came to existence. So I think that's just a good example to look at. And even in my own life, I called my financial planner yesterday, and I asked if I need to move everything out of the stock market. Just because of the tariffs war that are going on, because of the uncertainty with our economy, the mass government firings, there's just a bit of uncertainty that the Fed is actually looking at also to see what would happen with interest rates, mortgage rates. What do they need to do within their reserves in case this could cause us, and some of these decisions could make us go into a recession. So the Fed right now is on high alert, probably busier than they thought. So I kind of understand now what that panic is, but I also understand why we need the Fed, so hopefully they can relieve some of that panic and people would know that the money they have in the bank is safe. All right, just wanted to say that because of our current climate. All right, so while the Fed was also created was that in 1907, there was a huge panic that broke out. Congress decided it was time to fix it, so they passed in 1913 the Federal Reserve Act. This was initially created just to give consumers comfort and relieve that panic buying, just so we know that. And then, of course, the Fed initially was built or grew into the entity that we have spoken of now in the beginning of this presentation. Now, I will say some benefits of having the Fed was for consumer comfort and safety net. Also, a central bank strengthened the U.S. in the eyes of the world. It was important that the U.S. matured as a country, if you think we're not that old compared to the rest of the world, but we matured as a company or as a country, and it was important that we see that the U.S. had the rest of the world saw the U.S. had a responsible central bank and economic system. And then also, the central bank, what we've already talked about, would respond to local bank needs to relieve any of that panic. So they were there for the consumer protection and also to support banks that could be in crisis. Now, limitations to the Federal Reserve. Now, I thought this was interesting. I read an interview in ProPublica online publication in 2022, but they interviewed a Columbia associate law professor named Lev Minded, and he introduced me to the term shadow banking. Now, shadow banking does not come up in the Webster Dictionary or Oxford, but it is all over the internet, so it is a thing. Shadow banking is really interesting. It also led to the 2008 crash or recession we went through, because shadow banking basically means there are banks out there that are unregulated, and that people, it's not even just banks, it's even mutual funds, it's pension funds, it's insurers, it's high-risk hedge funds. They are completely unregulated, and which means the feds cannot monitor them. Now, and I think I read a stat, 49% of financial entities are shadow banks out there that the Fed does not have visibility to, which means if they're doing some underhanded things, or they're approving people who can't afford what they're doing, who are going to have to go into foreclosure or not be able to pay whatever is owed and go into debt, the Feds can't really control that. They have no relationship to these entities. They can't come in and release those reserves to support and help. And I think what is most concerning about these limitations is that the Feds from 2008, you think it would be learning process. The Feds made some tweaks, but they didn't really make any changes. So the shadow banking has blown up again. It's still unregulated and it's stronger than ever, which means 49% of some financial institutions have no regulation or oversight, and the Fed has no idea what's going on. But as for current Federal Reserve activity, so that, just keep that in the back of your mind. That's going on out there. That's a little concerning and a bit of a red flag that has not been managed in some way or addressed. Those shadow banking out there that creates a bit of havoc for us and some panic. But currently what the Federal Reserve is doing is, for us and consumers, they're not going to lower interest rates immediately, but they could deliver rapid fire reductions in borrowing costs in June when they meet, and they meet like 8 times a year. But they're going to meet in June to see if there's a concern about an economic downturn. And they are likely, just as we all are, watching to see how the current president's decisions like the tariff wars with Mexico, Canada, and China, and the mass government firings will impact the economy and supply and demand. So the Fed is patiently waiting to see what's going to happen. They also have currently acknowledged that inflation slowed a bit last month, which allowed the Fed to continue cutting interest rates, which is great for the housing market and for consumers. But they are also watching to see if there will be negative tariff impacts, which could trigger an economic slowdown. And let's just say that the Fed is extra busy right now, because there are some governmental quick fire decisions being made that's probably causing a little bit of heartburn for them. So here are my works cited, quite a bit of content out there. Please click into them. I found some content because I thought about Andrew Jackson. He hated the National Bank. I think it actually was dissolved in the like mid 1800s, which then led us with no bank at all or central bank. And then that's what led us into needing a Federal Reserve to be created and a central bank to be created. But thank you for your time. I enjoyed learning about the Federal Reserve System. I hope this was helpful. I know I ran over, but hopefully you benefited from it. And yeah, let me know if you have any questions. Thank you again and have a good day. Bye.